The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, the market trade on Tuesday had a bit of a risk-off tone to it as we worked through the session and got to the close. What was the reasoning behind it? What are we watching on the charts? Supply, demand, fundamentals in front of us, the technicals, everything involved. Here to help us try to solve the puzzle, our good friend Brian Splitt of agmarket.net joins us here today. Brian, great to have you back on Market Talk. I hope things are going well up there in Chicagoland.
Yeah, so far so good. It's been a little bit warmer than the last several weeks. We should make our way up near 70 tomorrow, so that'll be nice. But the storm clouds are rolling in, and I can hear some rumbling outside.
Yeah, I was going to say, I know you guys are in the line of some of those storms again, and a lot of folks are. We're seeing snow across the north, and obviously weather shaping up to be a little bit of a challenge here this first part of April as we start thinking about spring planting season. I know we'll talk about that a little bit here on today's show. I want to just dive in overall. Risk off is what the tone kind of felt like throughout the day on Tuesday. It seemed like it kind of stemmed back to maybe some economic concerns once again. Jobs report out Tuesday morning caught analysts off guard a little bit. I think traders were feeling some of that recessionary pressure once again, possibly. What's your take on how things unfolded on Tuesday, Brian?
I guess for me, I think the pressure in the grains is related to the improved forecast. If you look at the 6 to 10 day and the 8 to 14 day, it does show some warmer than normal temperatures coming in, some normal to below normal precip. And this is for the majority of our areas that need to get planting done. So I think right now the weather concern is probably going to reside in the northern plains. We look at the snowpack, and they're going to warm up, and you're going to have several feet of snow melting likely in a short period of time. So I think you're going to continue to see grumblings about planting issues up there. But I had a client text me this afternoon and said, based on the recent forecast and what Empire Weather, which is one of the weather outfits he follows, he thinks Iowa, may have a record planting pace in store over the next couple weeks. So I think that's a big part of it. Plus, you got to think, okay, so we had that report on Friday, and a lot of the phone calls I got yesterday were like, oh, we have these $6 sales on corn, let's take profit. And I'm like, guys, no. The problem I see is that we had a friendly stocks report. The acreage report was not bullish, it was bearish, but I think a lot of the trade is saying, well, that's the biggest acreage number we're going to see. So they're trying to be friendly on that, trying to be friendly based on crude coming out of the weekend up $5, trying to be friendly on the potential for prevent plant. And I guess my thought is, okay, we made a high a couple days before the report, and with all of this friendliness, we can't get through that high. And here we are, revisiting the report day low. So at least in the short term today, we're holding the report day low for new crop corn, but this isn't necessarily a good look. And I would say that, man, if we came out of this long holiday weekend with a good outlook for planting for the majority of the Midwest, I think you're going to continue to see pressure on new crop contracts.
So with that in mind, Brian, as you think about those new crop contracts, you look at the charts, is this maybe a week where if I'm a producer, now that the markets have digested some of these factors, the Friday reports we saw, et cetera, is this a week where I'm looking to get some protection in place of some sort to manage my risk here as we head into a holiday weekend and ahead of us?
I don't know. I think the week to establish protection was last week. I mean, if you didn't care about having some downside coverage prior to that report, with the potential of what it can say, then you probably don't care about what's happening today. I think the report was the thing that probably had the most potential to send us into a major repricing event very quickly, and it didn't, which is good. But I don't think if a producer was anxious about having downside coverage prior to the report, they're probably not very anxious about it right now either. But what I would tell you is that December corn at 540 is an extremely important level. The day after Russia invaded Ukraine, we made a low at 540. That low was the low, and then we ran up to the contract highs. Then in July, we came back down and made a 542 and 3/4 low in early July, a 543 and a quarter low late July. So if for some reason we take out 540 on December corn, I think that's going to be absolutely catastrophic on the chart.
You mentioned crude oil once or twice. Obviously, the OPEC news pushing crude oil about $5 higher there, as you mentioned, to begin the week. What's your take on that situation and how crude could, will, should impact these markets possibly here as we move forward with that big OPEC cut?
Yeah, so I mean, with crude oil, I think there's a couple angles to that. Number one, we did rally into that cut. Number two, the highs that we've made since the cut was announced is really just back to the upper end of a trading range that we've been in for, I don't know, maybe 6 months or so. So I'm trying not to get too excited about that unless we get through these highs that we've been failing at for the last several months. Then maybe that suggests that something more is going on. But also, I don't know that OPEC would cut production unless they were concerned about demand. So that's maybe one angle as to the reason why they did it. I also think another angle is, we and being we as a country, the United States, and more, I guess, directly the administration has previously asked OPEC for help as far as producing more oil to get inflation under control. And then said, hey, we're going to go ahead and refill our strategic reserves at $70 and lower. And then we go to 65 and the administration says, nah, never mind. And I think that pissed off OPEC. So OPEC says, okay, we're going to cut production X amount per day through the end of the year. And by the way, that amount of total production we're going to cut is about what you guys need to fill your reserves. So if you're not going to take it off the market, we're going to take it off the market by cutting production. So I think that was a little bit of a middle finger to the administration because of the reluctance to refill reserves where they said they would.
I totally agree with you. I echo the sentiments there. That's just the feeling that I get from this situation as well. Wheat market did its best to try and hold up on the day Tuesday. I know we got those poor crop ratings. That's no secret though. But I think the other flip side to this wheat trade, Brian, I'd love for you to expand upon is just fact that U.S. wheat's not cheap right now. I mean, think about Russian wheat. It's cheap compared to what we have. So I know that's going to create some headwinds for this wheat market as a whole, I feel like, moving forward right now.
Yeah, so much like what we said earlier about corn and the inability to push through highs on news that should be friendly. And then you think about wheat and specifically hard red, that's the wheat where we continue to look at the crop conditions and say, wow, that's no good. Yet wheat can't rally on the news, right? So here we are, I don't know, 30 cents off of yesterday's highs. Same thing with wheat. I look at July wheat, that's the new crop contract, and we failed right where we've been failing for the last 6 months or so, minus maybe going a little higher when we had that pump into October where all the grains made some fall highs. So that went to resistance and rolled over. And so, like you said, wheat, are we competitive? No. Soybeans, I think the spread between Brazilian beans and U.S. beans is near record levels. And so when you think about what that means, and we look ahead to the report next week and say, okay, quarterly stocks were tighter than expected, so carryout should drop. And maybe it'll drop a little bit, but I don't think it's going to drop as much as people think because the USDA will most likely come in and increase imports. We're going to see imports coming into the East Coast. And so I don't know, again, if it's going to be enough to offset the reduction in the stocks, but I don't think the carryout number is going to be as bullish as people think.
We're having a conversation here today with Brian Splitt of agmarket.net. And Brian, just thinking about everything, and you mentioned all these different factors that need to be friendly. And, I appreciate the common sense outlook here because I think you are spot on. We're at the point where a lot of farmers looking at their risk management, if they didn't do anything before the report last week, they very well may not do anything here. ahead, after the reports heading into a holiday weekend. But I also keep in the back of my mind too, thinking about, okay, well, I look at D's corn, that 560 level. I look at Nov beans, that 1315 level. I mean, to me, if that's your worst sale and it pencils out, it makes sense. So I don't, I wonder, I wonder sometimes where the thinking lies. Is it more of just, hey, we'll wait and see what it looks like in a couple of months, or what the case is? Sometimes I wonder when it's risk management time, how things get penciled out sometimes. I don't know. I'm rambling a little bit, Brian. I'll let you maybe pick that up and
and
share
I
some
get
thoughts.
it. I mean, so I guess the number one question is, does 560 pencil out? And for some it may, for some it may not. That really probably depends on what type of prices, was paid for fertilizer, if you're paying
Yeah.
cash rent, or if this is ground that you're farming, that's your own ground. And so those are probably the two major differences between, is this profitable here or not profitable. But I think also producers are really stuck in the mindset of the timing aspect of when do we typically make highs. May, June, July is typically when we make highs. But you look at the 1 year that we're tracking the closest, and it's 2013. And so the problem with that is the high for the year in 2013 was the very first trading day of the year, which is the case thus far for these 23. We were right at 590 in 2013 when we started the month of February for our crop insurance discovery period, which is right where we were this year. We had that breakdown into the 540s in 2013 into early March, which we did this year. Then we rallied back up to just above 570 into the stocks report, which we did this year. And then we rolled over into new lows afterwards. So as much as the market may stay volatile and there's going to be a lot of growing season ahead of us, I think you're going to have opportunities to sell 570 to 575 again over the next couple months. But I think it's going to take some kind of a major weather concern to see a $6 tag in front of it again.
Well, let's shift our conversation to livestock a little bit here. I'd like your thoughts there. Some pressure in cattle and hogs, most of it in hogs, and the feeder cattle trade, it looked like on the day Tuesday. Have to think some of that tied to the outside market pressures, but obviously I know we have different concerns with demand and both domestic and export demand in this market, and just watching things in general as we start to shift slowly here to summer grilling season ahead of us, Brian.
Yeah, I mean, hogs have been an absolute bloodbath. This April contract made new lows today. So it looks like April, is trying to square up with the index. And then you look to June and say, all right, well, if the index is in the low 70s and June's at, above 90, then maybe that needs to be sold. Are we carrying too much premium there? And so that's, I think, the mindset that we're operating on today. You look at live cattle, and even though the market's down, we continue to see April gain on the June contract. We're lower on the session, but April's down minimally, then June's down a little more. And so we're continuing to see some bull spreading. I think that's indicative of the stronger cash market that we've seen here recently. And boy, the cattle market's been very impressive. After the recovery, after that little banking crisis low that we made where we saw some liquidation, and we just came out and had 4, 5, 6 sessions in a row of extremely strong gains coming out of that. And I think that just points towards the innate strength and fundamental strength of the cattle market right now. And again, I think I've been saying this for the last several months, but I feel like your biggest risk in cattle is just a major economic downturn. Otherwise, without that, I think that market should stay supported.
Well, and I think as well, another supportive factor that we don't want to see, but the potential there, we'll have to assess after this week and next. But this big winter storm across the northern plains right now, this blizzard, what could that do to the spring calf crop up there? If we do see losses, that's going to affect an already tight supply of cattle. So as much as we don't want to see that, I know that's a story that we're going to have to pay close attention to over this next week, and how it may affect this cattle market, Brian.
Yeah, I think you put it perfectly, and I'm not going to disagree with anything there.
Brian, well, I appreciate the time here as always. Before we let you go, I will open the floor to you. Final thoughts, anything you want to reiterate for folks, just as they're looking at these markets and looking at swings and moves like we saw on Tuesday with a risk off tone, just Anything else on your mind that you want to share or remind folks to think about?
Yeah, I would just say for new crop corn, I think that's on the mind of a lot of producers. The high pre-report was 576 and a quarter. Yesterday's high was 75. So that area is going to continue to be good resistance. In 2013, we kind of did that where we made highs just above 570 in late March. We retested it in late April. We retested it in late May. And then the last peak up that 570 area was in mid-June. And then from that peak, we went into the 450 level for the next low that was made in August. So I think you have to look at rallies as selling opportunities. We are in a downward trend. And I think using short dated options is a really good way to pick periods of time where you have some coverage at some key chart points without spending all the premium for a December option.
Brian, if folks have questions, they want some advice from you and the team there at agmarket.net, I know you have a lot of great resources online, phone calls, a lot of great ways to get in touch with you guys, isn't there?
Yeah, go and check out our website for a 30-day trial of our intel. It's www.agmarket.net. Our general line is 844-4AGMARKET, so 844-424-6758. My direct line is 815-665-0463.
We appreciate the time and the analysis as always with that. Brian Splitt of agmarket.net. Thanks so much for joining us here on Market Talk today, buddy, and have a great week. We'll talk to you again real soon.
Okay, sounds good, Jesse. Thank you.
That's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.